Hey everyone, welcome back to Cheryl Trades Leaps. If you've been watching the market lately, you've probably seen all the headlines. Is this another .com crash? AI bubble about to burst? Market collapse incoming? And I just want to slow everything down for a minute. What we are seeing right now is a pullback, not a collapse. Could it go lower? Yes. Could volatility increase? Absolutely. But that does not automatically mean something is structurally broken. 1. Why are stocks dropping even after good earnings? Let's talk about what's actually happening. We've seen companies like Microsoft, Google, and Tesla beat earnings. Top line beats, bottom line beats. And yet, sometimes the stock drops. Why? Because the market is no longer rewarding good. It wants exceptional. There's massive capital expenditure going into AI infrastructure right now. Billions of dollars. The market wants proof that this spending will translate into future earnings power that justifies current valuations. That's not panic. That's the market maturing. 2. Why Leaps investors should think differently. Now this is where Leaps investors need to think differently from short-term traders. If you're trading weekly options or zero-day contracts, volatility feels terrifying. But Leaps are different. Leaps give you time. Time for earnings to grow. Time for sentiment to stabilize. Time for innovation cycles to play out. The advantage of Leaps is duration. You are not forced to be right tomorrow. You are positioning for 12, 18, 24 months out. That changes everything. 3. The real edge during pullbacks. Here's something that most people know, but struggle to do. When something goes on sale, you're supposed to buy it cheaper. But emotionally, red feels dangerous. The real edge with Leaps during pullbacks is scaling in. Not going all in at the peak. Not panic selling during drawdowns. But allocating gradually as price compresses. If you structure properly, meaning you have emergency savings, you are not over-leveraged, you size positions responsibly, then volatility becomes opportunity. If you are over-leveraged, every red day feels like disaster. If you are disciplined, red days feel like inventory reset. That's a huge psychological difference. 4. What can go wrong? Let's be honest. Leaps are powerful, but they can be dangerous if misused. If you use money you cannot afford to risk, over-concentrate in one ticker, buy too far out of the money contracts, or panic sell at emotional lows, you destroy the advantage that Leaps give you, which is time. Time only works if you let it work. 5. How I personally approach this. When the market pulls back, I don't rush. I watch technical levels. I wait for stabilization. I scale instead of jumping. If price confirms strength, I press. If it drops further, I add thoughtfully. If volatility spikes, I evaluate implied volatility before entering new contracts. This is not about predicting the exact bottom. It's about surviving the cycle and being positioned for the expansion phase. Because markets move in cycles. Expansion, compression, expansion again. If you can survive the compression, you participate in the expansion. Final perspective. We got used to easy money over the past few years. Now the market is demanding discipline. That's not a crash. That's growth. And as Leaps investors, our job is not to chase excitement. It's to build positions in long-term innovation and allow time to do the heavy lifting. You don't lose money until you sell. But you do lose opportunity when you panic. This pullback could continue, or it could stabilize. Either way, if you are structured properly, you are going to be okay. If you found this helpful, subscribe to the channel. I'll continue sharing how I approach Leaps during different market cycles. Stay disciplined, stay patient, and I'll see you in the next one.